Good morning, ladies and gentlemen. Good morning, everyone, and welcome to this live trading webinar. For those who join us for first time, my name is Theo, and I will host this webinar for you today and also every single day here at 9:30 live from Admirals directly to you. So I hope everyone is doing okay and everyone has a great day so far. So ladies and gentlemen, let's share our screen and let's go to the premium analytic portal. Let me reload the website so we get the update one. How is trading going, guys, so far? Give me some information about your trading. Give me some heads up. Are you currently holding some pairs? Ladies and gentlemen, let me just check something here to make sure everything is okay. That's a premium analytics. So today's top headline, and what do we have here? China's economic growth fell to near historic lows as COVID took a bite. Next, China's population declined in 2022 for first time in decades. Scottish law on gender recognition blocked by UK government. Russia and Belarus staged military exercises on Ukraine's border in show of force. Rio Tinto 2022 iron ore shipments flat, costly likely higher than forecast. Elon Musk, Tesla poised for trial over tweets proposing to take car maker private. Wow, and that's what we have for now. Let's check here the calendar. If we go to filters and we just click that one there, so far it doesn't show any major events for today, although we had some major events in China. That's why we have this news announcement today. And ladies and gentlemen, just to show our disclaimer as well, we started a little bit opposite today. So here is for everyone to read and understand and acknowledge that this content is used for general information only, and it's not intended to provide trading or investment advice or personal recommendation. Let's move on. Guys, today, let's have a look here. Hello, everyone. Hello. So is everyone able to see the MetaTrader platform? Guys, please confirm if you can see the MT5. Okay, perfect. So ladies and gentlemen, here, let's bring this away. So let's start with the pound US dollar. Something I was looking yesterday, and I had few pivot lines. If you are using the if you are clients with us, with Admirals, and you are using Admirals account, here you have your mini terminal. And if you install the mini terminal, if you don't know how to do it, please speak with your account manager or the customer support, and they're going to help you. And there is lots and lots of additional indicators here. And if you go to scroll down and you find your Admirals pivot points, you can use them in your trading. And also, it will help you a lot when you do intraday trading. So, but enough said about that. Let's just go to the daily chart. Pound against the dollar. yesterday we had this pin bar here, let's say this upper lower shadow. For candlestick traders, we had this inside candle, although we were expecting to see more continuation. We are above this 200 moving average, but the market got false breakout and then it retraces back. Now, this put us back to this range here, 2-day range. Again, within this bullish engulfing candle. So is it today a good time to sell? Based on this candlestick, if we isolate this candlestick and we take the implication, yes, it shows bearishness. However, for me, I combine a few other different aspects like the order block analysis and all this stuff. And I do see that this here, where is the R2 level, based on the pivot points, or I can point it on the chart for you. In this level here, we started the rejection from this bearish candle, and that's where I want to see the price to come first before I start looking for shorts, if we're going to go for a range trading activity. All right, but today it looks very range, and I wouldn't tempt it to touch it. Okay, for me it's still bullish because we don't have any strong signals from pairs that they can take over. Let's move on. The euro against the US dollar, pretty similar pattern here. And here it's a good candlestick training for you guys. We have this breakout with this massive bullish candle. We broke nicely above this resistance or this resistance. And yesterday and 2 days ago, we had some trial from sellers to push the price downwards. But what did they achieve? Pretty much they achieved nothing, because the price didn't create any significant of activity here, of volume. You can see the candlestick body, it's so minimal compared to the recent candlesticks. And that's how you can read the candlestick patterns. Okay, if you are a trader that don't want to use any indicator, you have to learn how to read the candlestick patterns. Okay, so take this in advance from me today, and you understand that when you have very small bodies, this force is not present. Now, what if for a swing trading, definitely if we go to the 4-hour chart, we would like to see continuation pattern. And for me, it looks like maybe an ascending triangle somewhere here. If I touch only the tails, I don't cut through the body with the trend line. This one is not valid. So we have this type of consolidation. It has bullish implications because even on the 4-hour, we can see the price, it has so much explosion to the upside, this bullishness with the candlesticks. So we will be patient and wait. Some people, they ask me, so can we start buying here? There's nothing wrong to start buying here. However, the stop loss has to be somewhere below these candles, or even better, below this swing. That's why in swing trading, we always say that if you see this, we wait for around 50 to 61.8% retracement. So we get, because if the price is going to be rejected here, it already dipped into this area of support and it got rejected. So the forces are present. All right. We don't want to buy right at the top because we don't know how deep the retracement will be. And without knowing how deep the retracement will be, we don't know where the stop loss will be. So if we don't understand where we're going to place the stop loss, how can we measure the potential target? And how can we measure our risk on the trade? USD CHF, we are in this pattern, as we said, consolidation here. what I observe in all these years in trading is that when we have this consolidation pattern after a downtrend and the market consolidates, it's more likely it can push to the upside based on the fact that we have a strong support here. And at many occasions, the market, it's just move like this. It breaks and then it comes back with a false break here. Okay, but without saying that this is going to happen, we are around support. And if we are not willing to buy the support, we definitely don't sell right on the support. Okay, if that was a recognized pattern, like a descending triangle, ladies and gentlemen, if that was going like this, with lower lows, with lower highs and equal lows, let's say, sorry, the way I draw here, it's a bit messy. So if we have this support and the market is doing like this, then we could try for some breakout here because we have a recognized continuation pattern. But if we have this consolidation with upswings and down false breakouts, it's not a very high probability pattern to trade. And again, I will repeat it one more time. I repeat it all the time. High probability trade or low probability trade can equally give winnings and losing trades. A low probability trade can win, a high probability trade can lose, of course, and vice versa. But we have to choose what type of trades we want to take so we feel okay with ourselves and we don't get caught in any destructive emotional pattern. Then Australian dollar against the US dollar. Similar pattern here. The price tried to break up to the upside. We talked about this hanging man candlestick yesterday. We are well above support. It looks like that this pattern has a valid breakout to the upside. And we saw this false breakout from this area here. Now, if we're going to see some continuation to the downside, we will see, because this candlestick pattern here didn't play out, and it's only today we will see what can happen. Kiwi against the dollar, very mess. Nobody's here. It's like very, very consolidate for trend following traders or for range traders. However, US dollar against the Canadian dollar is trying to get some way to the upside. We will see if we're going to have some rejection here. It's a nice area, and I would like to take some activity. Although the trade I took from up here, it already played out days ago. The Japanese yen, USD against the Japanese yen. As we said yesterday, we are approaching this area of support. Yesterday, we were looking to sell in anticipation of the weakness. The market put this bullish candle. It indicates that maybe a retracement can come. So where it's the next level that the market can be sold off, maybe this low point here, or maybe it can come all the way up here and retest this broken swing. So we are ready to take action in either side. If we're going to take action here with a very strong price action, if we're going to take action here, maybe even limit orders, they can be used something like here, okay, in this area. So let's keep an eye on that. If the price is going to come here, we will try to pay more attention and do more extensive analysis. We have a trend line also. And why I choose this area, because that was the last swing before this move to the downside. So this swing here can be retested before the price is going to take over, without saying it has to be retest. I'm saying most of the times it's an ideal retest. Then pound, where is the pound? Pound against the Japanese yen. Some traders, they were asking about this one recently. Let's have a look. We are at this support. Obviously, pound is much more weakened than the other currency pairs. So at this support here, and it looks like buyers, they are taking over. They create a new high in this market. So we will see what their intentions are. This is an inside candlestick pattern for traders that they are trading candlestick patterns. Here it's a support. So we have a support. Here it's a double bottom. So maybe this could be, but for me, an ideal and the way I trade most of the double bottoms is I enter here with a stop below there. But in this occasion, it's really, really not worth it. So I'm not going to attempt to trade this double bottom. But if you are trading it, and it's totally fine. Retracement in the CHF against the Japanese yen, retracement is also in the CAD against the Japanese yen. So for intraday traders, I had these questions all the time. They ask me, what do we do? Let me check for some questions here. Sorry, guys, I'm just using one monitor today due to some difficulties, and just one monitor. It's very hard to keep all windows open. So now I just have a look to the YouTube questions. Theo, can euro pound 1 hour be interpreted as head and shoulder chart? We will answer that. Aussie CHF to buy on 4 hour. Aussie CHF, where will you place your stop loss, rumor? We will answer that. So we have euro pound 1 hour and Aussie CHF on the 4 hour. Let's finish first with what we start saying here. We are on the CHF JPY. If we are about to do intraday trading, for example, and we go to 15 minutes or to 5-minute chart, because this webinar is very, very short in duration, so that's why I use the 5-minute chart, because we can see some more activity in the market. And if we want to trade based on the previous day price action, regardless, it's a low probability trade to trade against the prevailing trend, but also we increase the odds if the previous price action was a strong price action, like the reversal from support we just saw on the daily chart. Now, the market is making these higher highs, but you can see that these swings here are very, very, they lack the volume in this, especially in this area. So this didn't make a new high. So ideally, we would like to see a higher high and take on the retracement with a limit order to get us to the upside for the retest of that swing and make our 2-to-1, 3-to-1. Okay, that's how we use the intraday for high probability setup. Let's have a look at the gold. We said that we can see the gold definitely experience some retracement. I'm waiting for this retracement, to be honest. It's been a while, so I can get filled in better price. So I will keep an eye on that and see, maybe the price will stop around this area of support, but I believe it's going to come and retest this area here. Okay, so I will keep an eye on that. Anyhow, this matches nicely with a fib level. I assume if we take from the lowest point before the impulse move to the highest point, we see the reversal. We are around between the area of 50 and 61.8%. So we have strong cluster of levels here, and they can play out really well if the price comes there and get rejected. Let's move on. Euro against the pound. On the 1 hour chart, head and shoulder. Yes, this is a clear head and shoulder pattern. I like also this upward steep line, trend line. However, we have to understand and know how to trade the head and shoulders patterns. If we say that this is the neckline, we wait for the neckline to break, and then we can go to a lower time frame, 15 minutes, 5-minute chart, find some entry points on the retracement and get to the downside. Now, if you're an aggressive trader and you want to sell it right here on the anticipation of this head and shoulder reversal pattern, be mindful where you're going to put your stop. Looks like the stop has to go above there. And then to make 221, 321, yeah, okay, you have room to do it up to here. So if you believe that's where the market has to go, let's put our zone here. Somewhere here we have a lot of resistance, and this 1 hour it looks like to be below resistance, so that's a good pair to keep an eye out for, head and shoulder pattern only. Australia dollar against the Swiss franc. To buy on the 4-hour chart, to buy on the 4-hour chart with where to place the stop loss. If we put our trend line here, we have a trend line support, then we have our area of horizontal support. Let's check about the fib. The fib, it's coming, almost coming to the 50%. Let's see if it's going to be rejected. Now, if the price, for rumor and for everyone, if the price is going to stay just like this, okay, be mindful that maybe we're going to have a false break before the price is going to take over, if it's going to take over. So maybe it's going to show a false break. That's why if we buy somewhere here, be mindful that our stop loss, it has to go either below the 61.8 or below the 78.6% fib area. All right. Let's move on to any other pair you would like guys to see. Australian dollar against the Canadian dollar. We said about this long tail pin bar that it's not a high probability double top, because the market is, after this one, put this bullish engulfing. So it's not, it doesn't convince me that this market wants to sell off. Canadian dollar is generally weak. Australian dollar has some signs of strength. So it's better to be careful with that. Please have a look at the oil. Yes, definitely, guys. Again, apologize for today, but I don't have the chat box open due to the limit capacity of my screen. So be patient when you ask something. Thank you so much. Oil, where is oil? So this area of this zone here, it's a good zone of resistance. Excuse me, guys. So this area of resistance here can play out for some shorts. However, that's where traders many times they get confused. We come here and we see in isolation this area here. But guys, we have to, especially if you're a swing trader or a price action trader on the daily chart, you have to zoom out a little bit and have a look the market structure. This market, it created a lower high and lower low here. So at this point there, it was a good point to sell, but we didn't see a follow through in this swing. This push to the downside didn't continue as it was coming all the way down to create a new low. And that's what we call a failure swing. Now, a failure swing means it's a failure attempt from the market participant. They were dominating this area like the sellers were. They were unable to create a new low in their attempt to continue to the downside. And what did we see happening? We see the buyers came all the way up, and we are right at this resistance. Now, most of the times this pattern, it goes like this. After the swing failure swing, we see this move like this, and then we see a break to the upside. All right. And then the market is just pushed higher and higher and higher. So be aware of that. If we're going to sell today here, just make sure your reward to risk, it's going to be enough until if the market decides that this failure swing is valid and it's going to push to the upside. All right, so be mindful with that. And last, we have a few minutes left. Let's have a look. The indices, the US dollar yesterday from this support, close to this support area, I would say, and it came with this bullish candle, rejected the lower prices. However, remember, we are still in a downtrend and we can expect the downtrend to be continue. The only way to start buying here in a long term, it means to sell the euro against the USD and to sell the pound against the USD and the rest, as I explained multiple times. It's when we have a higher than this high that was the previous high in the market. So after we see this, then we're going to start looking for trend continuation patterns on the euro and the pound and the rest. But for now, if we're going to buy the US dollar, it means we're going to sell the Aussie, sell the euro, sell the pound, sell the Kiwi, buy the dollar against the Swiss franc, buy the dollar against the yen, buy the dollar against the Canadian dollar. We're going to do it only in the long term, like the intraday trading and not necessarily the swing trading. DAX still waiting for the retracement. We had some reversal price action yesterday, so we will see if we're going to have some follow through. If you go, let's say, to the 5-minute chart and you find something with lower highs and lower lows, maybe it will be a good trade to anticipate the continuation of this daily price action. FTSE the same. Dow Jones and Nasdaq and S&P 500 exactly the same. If I was about to sell something here on the intraday, I would prefer the S&P 500 because it has a stronger reason to be rejected, because we are around this 200 moving average instead of the Nasdaq, for example, that we are above this 50 and we didn't even reject some strong level of resistance. Or this one here, it's like in the no man's land, but the S&P 500 showed some rejection here. So ladies and gentlemen, it was a privilege and honor to host this webinar for you today. The time is pressing us a lot, as I always said, and I wish you happy trading, and I look to see you again tomorrow at the live trading webinar. Thank you so much. Bye for now.